Good afternoon. My name is Nicolai Lunde. I'm the CFO of NBX, and we were the first active Norwegian Bitcoin Treasury company, as Stig said. So I'm going to try to explain a bit more today about what that is, how or why companies are utilizing that strategy, the pros and cons, and what we think will happen going forward. Briefly about me. I've mainly worked in banking my whole life, both in private equity, following up banks, been on the board of banks, followed up the largest credit card issuer in Germany. I have a dog. I play ice hockey. That's why I need notes. Got a lot of hits to the head. We've also seen lately that people have established AVAX, Sol, ETH, and even Doge treasuries. I won't touch on that today, but as Stig said, we will also put the iCoin Tau on our balance sheet to create yield generating opportunities and to kind of explore the ecosystem. So it's a brave new world. But let's start with Bitcoin treasury companies. So a Bitcoin treasury company, it's very easy. It's a company that has or switched some of its cash assets out of its treasury and put Bitcoin in there instead. So the definition is very clear. The main points of the strategy can be summarized in borrow or accumulate capital. Use that capital to buy Bitcoin. Never sell your Bitcoin. And that is basically that. As Stig said, you can kind of switch between active and passive strategies. A lot of funds today use passive strategies. Stig show how you can use it actively to create yields within other kind of ecosystem, especially if you can issue stable coins such as we can. And the reason companies do this is simply to diversify from traditional fiat currencies. And that is because of the inherent qualities of fiat money, where they are debased over time due to inflation. So to take a very oversimplistic example, say Alex is here today, you live in Turkey. In Turkey, the inflation is 80 to 140%. So if you are a company and you have your company's treasury in cash, then within a year, you will lose 140% of your purchasing power. So then you can either go out and raise this shortfall, or you can increase prices with 140%. And of course, both of them are pretty difficult, if possible at all. In Turkey, you also have the central bank, or you used to have the central bank being run by Erdogan's son-in-law. He was fired, and then they hired the risk chief of Silicon Valley Bank, the bank that got bankrupt last year and was taken over by the government. So, I mean, it's not sure that these are or for many Turks, it is easier to trust in the mathematical inherent properties of Bitcoin than to have the politics of central banks and now general politics inflating or changing the money. So, and as Stig said, you can also use it to get exposure to digital asset innovation or to attract new investors, such as the ones that cannot invest in Bitcoin directly, but has a mandate to, for example, invest in stocks, such as we are on the listed public exchange. So why do you do this? I mean, everyone in this room is probably here because you know about Bitcoin and at least are interested. But I'll go quickly through it regardless, in case someone doesn't know. It's a hedge against inflation due to the limited supply, which will always stay in value towards a given money supply or hold firm. So you can say that maybe that strategy is more suited for countries where there's more political chaos or more inflation. Norway and Latvia are both small economies which are dependent on the global financial system, where money printing has become kind of a weapon in some economies. And we all know from history that politicians like to kind of print themselves out of money. troubles, which create inflation. And inflation hits the middle class and the lower classes, which has the least from before. So this is due to what is called the Cantillon effect, which is that people closest to the money get most of the appreciations when we print money. So the people who has assets and can obtain loans, while, for example, food prices or rent increases. So, and I think America is also a pretty good example here, because 40% of all dollars in existence has been created in the last 4 years. And this is a republic that's been up and running since 1776. So imagine that you've worked from 9 to 5 for 60 years, you're retiring and you have your money in a retirement account, and then suddenly, due to the corona response, they print away 40% of your purchasing power. Then, of course, you feel the pinch, like a lot of people do today. It's the same with companies. If you only keep your cash in the treasury, or if your treasury is only cash, your purchasing power will mathematically be reduced over time, because that is how fiat systems are created and set up. Yeah, diversification is pretty self-explanatory, but since Bitcoin's creation, it has correlated around 7% with gold and 20% with other asset classes. So that means only a 1 to 5% allocation to Bitcoin will, at least historically, always have given you a better risk-adjusted return. And as mentioned before, that is due to both the long-term appreciation, but also the enhanced liquidity that is possible to get. So yeah, I think if you're into Bitcoin, you will agree with most of what I just said, but has it worked? Enter Michael Saylor. I'm sure a lot of you know this guy. He is a Bitcoin maximalist. And a pretty strange guy, but he's rich, so then you call it eccentric instead. Someone asked him once, like, if he shouldn't buy other cryptocurrencies instead, and his answer was, if you're going somewhere, you don't need 2 planes. And on the analyst call, an analyst asked, but what if Bitcoin goes to zero? What will happen with the company? And his answer was, what if time starts flowing backwards? So he has maximal conviction, and was one of the first that, of course, established this Bitcoin Treasury strategy. And it has paid off to have this conviction and to have this courage. The company was for a long time a software company, but after they changed in 2020 to the Bitcoin Treasury strategy, their stock price has appreciated 2,700 times, which is a lot more than, for example, another stock we know, and Nvidia, which is up only 1,200% in that period. It, of course, has also given them a rebranding. I mean, most people in the world now know who Michael Saylor is, or at least MSTR. And it has broadened their investor base. As Stig said, it's few companies in the world that has managed to attract this much capital in the last 4 years. They hold around 639,000 Bitcoin at the average price of 74,000. And his goal is to get to 5% of the supply. Yeah. And yeah, finally, the number down on the right, this is from a previous presentation, but that is actually the Bitcoin exposure for the Norwegian Oil Fund, also our sovereign wealth fund. So our governing parties in Norway are still debating if we should ban Bitcoin mining. But at the same time, our most professional capitalists and investors are quietly building exposure to this asset class. And the Norwegian Sovereign Wealth Fund is the largest in the world. So it's interesting to see. Okay, so how did this strategy change go? If we look at analyzed returns over the last 4 years, we can see that Bitcoin has yielded around 94%. Nasdaq has yielded 20%. We have 14% in large cap. Gold is 11%. Real estate is 5%. And cash is just at 2%. So if you have cash in your treasury, and you get a 2% yield on that, and inflation is 5%, well, then you have a net negative real return on 3. So you're losing purchasing power. So for example, if you're a hotel chain like MetaPlanet and you know you have fixed costs in fiat, this will erode your business over time, or at least your treasury. Very few companies hold tech stocks and gold on their balance sheets, as you know. So most have gotten the return on the right, which is negative through bonds. So we are kind of in a new world. And like, this is not investment advice. Things can change immediately. But since Bitcoin's inceptions, no asset class have provided a larger return, even when adjusted for risk in some years. As I said, MSTR has in this period also given around twice the return as Nvidia, which is all the talk. So even if MSTR falls 50% tomorrow, their strategy change has been a complete success. And even interesting, this is the top 10 largest corporate treasuries in the world's largest economy, the States. And we can see that MicroStrategy is already in the top 10, even after starting just in 2020. And if Bitcoin doubles in the next 3 months, then there will be number 2, if the others haven't reported, etc. But anyhow you look at it, it has been a complete success for MSTR so far to adopt a Bitcoin treasury strategy. And as I said, not only in stock price appreciation, but also rebranding, broadening their investor base, branding, modernizing IT, and it's just given them an enormous push. And other companies has also, of course, noticed this and copied it. Right now, there are 3.75 million Bitcoin in treasuries and 335 entities holding, or hodling, as we say. You have 12 governments or sovereign wealth funds that are also invested in this, either directly or indirectly. You have countries like Bhutan and El Salvador mining Bitcoin. And as I said, our own sovereign wealth fund owns a lot of different companies. It was a bit small, but I'm sure some of you will recognize some of the top 10 names. It's like Tesla, Coinbase, Mara, MicroStrategy, etc. But the most important company, of course, it's down at the 148th place, Norwegian Block Exchange. So, yeah, thank you. So we're very proud of being the first Bitcoin treasury company in Norway. It's for us, it's more of a proof of concept so that we can help the hedge funds and the companies. We have about 500 companies as customers, about 100,000 retail customers, and around 14 hedge funds using us for trading and custody today. So we want to kind of educate ourselves so we can educate them, and hopefully during the year also help NextPay and to educate each other. So that are the big numbers, and I'm sure a lot of people will call this a hype, and that is completely fair. We humans love hypes. We have seen ESG booms, we have seen SPAC booms, the dot-com bubble. We like to kind of we like the volatile, but it's also kind of interesting to see what kind of risk does a strategy or a Bitcoin treasury strategy address. And the first is in a regime with low interest rates, then cash becomes unproductive, right? Because they don't yield anything and inflation is above the yield you get, as we saw in the previous slide. So we're losing purchasing power every day. So Bitcoin can protect against inflation while also providing an asymmetrical upside opportunity. In the negative, or in a regime with high interest rates, then of course debt becomes very expensive, both existing debt and issuing new debts. And it wasn't, I worked in a bank when central banks went from negative rates to 5%. and it wasn't always pleasant. So, and then Bitcoin is uncorrelated with traditional assets that struggle with these kind of high interest rate scenarios, such as bonds and real estate. Currency changes can, of course, affect the company both ways, but Bitcoin is a bridge between all currencies, so you can get in and out pretty quick at extremely low transaction cost. I think a month ago, we saw two American companies transacting, what was it, $40 billion for $21 in fees. So that is an enormous achievement, to be honest. For credit risk, you can reduce that by holding Bitcoin as collateral, because you can always lend against it almost immediately, and also 24/7 all times of the year. Bitcoin doesn't close. It's a digital asset and not a IOU like traditional fiat money. And it also, I've talked a lot about inflation risk, so won't go more into that. But Bitcoin's mathematical properties, meaning that you can produce more of them, will always mean that it will stay or increase in value against the money supply that experiences inflation or money printing or debasement, as we said, in all times. This is Fidelity, by the way, a pretty known financial institution. So having a Bitcoin treasury can obviously reduce risk, but is dependent on, of course, the Bitcoin price, but also digital assets and kind of the whole political economy around Bitcoin. So you need to kind of address that. So it is good to keep in mind that Bitcoin's maybe largest threat in the last 16 years has been governments. I think a lot of people have been holding Bitcoin for a long time has been worried that the government will just shut it off. And we are way past that point now. You have the president in the United States issuing his own stable coin and meme coin, which is braver in the world as well. But before that, you had companies like Santander, the European Investment Bank, GE Money Bank, Siemens issuing bonds on the blockchains. And this is on top of the, of course, enormous amount of retail investors who's also invested. So I would say we're past the kind of existential crisis threat point, and it's possible to have it in the treasury. And you also have stable coins, which Stig talked a bit about, but that's a really good social invention. If you see the largest stable coin, which is USDT or Tether, it has given banking services to around 400 to 500 million people who didn't have access to bank services before. And that is amazing. So this is people who then can send money around to family cheaply and fast. They can bring their wealth with them if they have to flee from their home countries. And if they're situated in countries with irresponsible politicians or central banks, they can change their own money easily to American stablecoin, backed one-to-one, which kind of helps them protect their purchasing power. And while crypto often get a lot of kind of negative media, I think this part of it will get more positive attention going forward. Tether is also, they're going to raise soon at a 500 billion valuation, making them as valuable as OpenAI and SpaceX. It's by far the most profitable company in the world per employee. I think in Q2 last year, they made nominally more money than both Goldman Sachs and Visa. So right now it's extremely hard to just turn off the whole system. That's why it's easier for us to kind of also recommend other companies having Bitcoin in their treasury, and while we also have done it ourselves. Yeah, I will also touch upon the ETFs, which I'm sure a lot of you have heard about or seen. The ETF that were launched last year are the most successful ETF launch in history in any asset class. If you look at the BlackRock EBIT ETF, it reached 70 million asset under management 5 times faster in 361 days than their gold ETF, which used around 1700 days. So there's enormous institutional adoption and retail attention around this asset class, which will kind of course, be positive going forward. I also think that while companies kind of compete to acquire Bitcoin today, you will probably see nation states doing the same in the future to secure their data on the blockchain and maybe fight soft wars. Lastly, we've talked about inflation, but that is because of the supply. So you have the Bitcoin halving, meaning that rewards get cut in half every 4 years. It's gone from around 6 to 3 now. So you have inflation trending towards zero, and actual inflation, not the made-up KPI numbers, or what you should call them, which means that you will much more easily keep your purchasing power, either personally or for your business, if you have a Bitcoin Treasury. And as I said, I have a background in finance, and I find it extremely interesting that Bitcoin is almost the only asset class that is completely uncorrelated with other asset classes. So that means if you want to diversify your own portfolio, you should have a small allocation to Bitcoin. During Corona, both stocks and bonds fell together. They had a 42% correlation. That's not supposed to happen at all. That's because in the past, every time the stock market has fallen, they have reduced interest rate and bonds have gone up, because that's an inverse relationship, right? It's just maths. But during Corona, they both fell together. And of course, Bitcoin fell as well. It's not that they're not always correlating, but if you look at the graph since inceptions, as I said in the start, Bitcoin has a 7% correlation with gold and around 20% with other classes. So risk-adjusted return, even if you have just 1% or 5% in Bitcoin in a diversified portfolio, will always, or has always historically, increased risk-adjusted return. But as the 60/40 portfolio demonstrates, correlation can always change. So again, not investment advice. Yeah, and I think like the ultimate freedom asset is maybe a bit much, but it kind of it solves the age-old problem. So gold kind of had that position for a number of years. No state can dilute the quantity. No banks can freeze the system, and it's borderless. So I would say that it's a natural evolution of money in a digital world. So of course, together with stablecoins, will pretty much completely change our financial system. And it is not really new. Like, and I'm not saying it's going to happen immediately, but throughout history, we have used stones for payments. We have used sticks for payments. Roman soldiers were at one point paid in salt. We're not using florins anymore. We're not using ducats anymore. The British pound was the reserve currency until the First World War. So monetary systems change, or at least they adapt and evolve. I don't think it's crazy to think that the 4 trillion asset class that is crypto today will move towards gold, which is a 22 trillion asset class, and that they both together at some point will move towards the 655 trillion asset class that is real estate. And real estate is, if not unproductive, it's it doesn't create too much for a society, like, for example, tech or fintechs. So this is the last page. So as I said, I don't think any of this will displace the dollar. On the contrary, since most stablecoins are backed one-to-one by the American dollar, like our own USDM, it will ensure that the dollar stays relevant for the foreseeable future. And it's also a geopolitical and strategic importance for the states to kind of build up the stablecoin system. Because as you all know, they have an enormous debt overhang and they need to refinance a lot of debt. Since every stablecoin is backed one-to-one by dollar, the larger the stablecoin market gets, the more broad the investor base for American debt also get. So if you're wondering why is the Americans pushing so hard on stable coins now, the Genius Act and everything, well, it's because they need people to buy their debt. Tether, the largest stable coin, now has more short-term US treasuries than Germany and Saudi Arabia. It was the seventh largest buyer of short-term treasury debt last year. So it's really hard to like envision a world where this all goes away. It's a geopolitical tool for the states to refinance their debt. And for Europe, which is following the CBDC route, it might get more difficult. And you might also see that instead of having our money in kind of smaller banks, why shouldn't we all just have it in an American stablecoin backed by the whole American state paying 5%? So at some point, you might also see that deposits get taken out of European banks and put into American stablecoins if that is considered safer. So yeah, I think it's like smart to think about the world we're entering. I think we've only seen kind of the starts of the enormous changes that are coming. I think at some point, the Americans, like we all see how they, if not bully, but kind of demand payback in different kind of ways now. I think at some point, they will demand payment in stable coins. For example, when trading with Saudi Arabia or other countries, like, okay, we'll sell you weapons and F-35, but you have to pay with an American stable coins, helping us refinance the debt. And I think they might program this money to also just being able to use by their allies. Because now you have Venezuela, Iran, you have a lot of countries on the sanction list that can use dollars in cash. But if you get everything on the blockchains, they cannot anymore. It's a lot easier to find out who your friends are then. Yeah, so I think I'll quit there. The last thing I would say is that I think on Friday, Google, Coinbase, and 60 other companies, they released something called X402, which is a system for autonomous AI agent to transact and pay within the Google system using stablecoins. So we are here now that we have clarity in regulation. We have the Genius Act and MiCA in Europe. We have L2 or layers like Base or Cardano that makes transaction extremely cheap and quick. And we are getting to autonomous AI agent who will do everything on our behalf. And of course, they will use stablecoins and Bitcoin to transact. They will not use the traditional banking system. So, and I'm looking forward to that because these AI agents will probably simplify our lives and create more prosperity than we can on our own, but it's a very new world. And that's why both we and hopefully Nextbit at some point recommend people to adopt a Bitcoin treasury and of course use and consult us when you do.